Welcome to the Bill Levinson Experience, a motivational podcast relating to the insurance brokerage industry and business in general. And now, here's Bill Levinson.
Okay, good afternoon, everyone. Welcome back to the Bill Levinson Experience podcast. Here we are, episode 53. And yes, I know it's been a few extra weeks that we haven't recorded an episode. It's been a little hectic here. We are busy, which is a good thing. We have 2 new employees that we've been training, and we've been literally going nuts here in our office, and now we have employees in 4 different states. So it's all a good problem, and it's because of you all, our agents. So I want to start off just by thanking each and every one of you. And I know we have a lot of agents, CPAs, financial advisors. I have estate planning attorneys. I have some friends that listen in. We have thousands and thousands of listeners from across the country, some even across the globe now. But the point of today's episode is I want everyone to walk away with an idea, a strategy, some nuggets, even if you're a consumer, right, and you have an existing life insurance policy. This could be a good option for you as well. So make sure, as usual, take out a pen and paper, a notes app, I don't care, but I want to make sure you jot down these bullets. If you have questions, comments, feedback, please let me know. Right? These are built around you. I want to make sure that you're walking away with a ton of value. So very important, reach out to me afterwards through any social media platform or directly into our office. I don't really care, but it's important that we hear from you. Okay, what are we talking about today? I have a special guest speaker on, Mr. Stephen Jass from LS Hub, and I'm super excited about this specific episode because, number one, we've been talking about this for years now, okay, and we've never had a chance to sit down and actually go through this one-on-one interview, if you will. So he is, real fast, also from South Florida. I met him, believe it or not, at the gym, and it's been about 7-8 years. So you just never know who you will run into. It turns out he's a rock star when it comes to life insurance settlements, okay? And I didn't know much about it at the time, but I've learned so much. And as you know, we have over 24,000 agents. So we started marketing his services, his strategies, his expertise. And next thing you know, we have agents reaching out to clients in their own book of business where maybe they don't need a policy any longer, right? Maybe they're over the age of 65. They aren't so healthy. And next thing you know, the consumer winds up with a check for over $100,000. The agent made $10,000, $15,000 of commissions, and it was a win-win, and now this client is traveling the world, right, because of you. So there's so many opportunities here, especially if you're an agent or a financial advisor, right, like I mentioned in the beginning. The point of this episode is we want to give you enough material, enough education where you can go back to your existing clients, your book of business, and say, okay, you know what, I'm going to reach out to Shirley, to Bobby, to Jerry. This could be a perfect opportunity. And on top of that, it's your fiduciary responsibility to bring this up to your clients, right? If the time comes and if you have the right policy and if they need to get out and if there's a financial burden, whatever the case is. So you're going to learn all about this. We even have the marketing material to help you get the word out. You can do this through social media, through your digital CRM. We don't really care, but we have everything that you need from A to Z. Okay, so I'm going to talk about the opportunity for a second, and then Stephen is going to take the wheel. So if you've been involved with life settlements before, wonderful, you know enough to be dangerous. If you never were involved whatsoever, but you're an insurance agent today, this is going to be music to your ears. I can promise you that. So listen to these stats, okay, because this is the sizzle, in my opinion. Okay, think about this for a second. Around 4,000 policies are sold each year. Okay, so think about this. 4,000 policies are sold through a life settlement source, a fund, okay, out of 100 to 200,000 policies that could qualify. That's just scratching the surface. That tells you how big the opportunity is. Okay, so roughly 150,000 policies across this country, right, could be sold today where the agent makes a healthy commission, insured gets a nice offer and walks away. Okay, think about this. I have three stats. Number two, around $30 billion is sitting there on a shelf that would be paid for those policies if they were sold instead of those clients or insureds letting them lapse. That's a big number, folks. Okay, and my last point here, and this is a big one, over 88% of life insurance policies never pay a claim because the policy lapsed or it was surrendered early for whatever reason. Over 88%. What does that mean? That means over 88% of those policies, you could have came in with a check for the insured, and you could have also made a healthy check for your own commission for doing the right thing for the client, which comes first. And do you think this is a great opportunity, a great episode? Do you need to know more? Absolutely. And by the way, this isn't right for everyone, okay, and I'm not saying it is, but for the right individual that's having a rough time paying premiums, right, depending on their situation, you could come in as Superman or Superwoman, literally, and save the day, okay? You're providing a resource that no one else has, okay, especially when it comes to bringing up the right offer for your client, okay? Because, by the way, if you shop this around, there's other huge companies out there, and the offer could vary by 50%, 60%. So going back to doing the right thing, you got to make sure. If you work with Steven and LS Hub, wonderful, okay, that's a great thing. And you can reach out to us for more information, okay? But if you're dealing with some of these other big corporations out of New York City, whatever it is, the offer can vary by 30 to 60% or even more. So make sure the brokerage operation is shopping with the right funds. It's very important, and I know Steven does and will do the right thing. Why? Because, like I said, our relationship goes back 7, 8 years. He's been doing this for over 10 years now, and he's still a younger professional in this business. So, all right, there you have it. Without further ado, Steven, do you want to say hello to our audience?
Absolutely, Bill. Thank you so much for having me. You're known to be super innovative in this, in the insurance industry, and it's been an honor to work with you and certainly have this opportunity. And thanks to all the listeners tuning in. This is definitely something that is a big value add. It's a conversation that's not happening enough. And, in my years of experience, I've heard, none of my clients are talking to me about this. And they're not going to. So this is something where you learn about it, you can identify opportunities, and when it's the right fit, and you're going into a lot that are, it's a big case. I mean, one of our first opportunities that came across when we started working together was a lady. It was a $250,000 policy. She had health issues. She had a real financial situation. She was actually being evicted. She had her grandkids living with her. And we got her $110,000 for that policy. I mean, it's been maybe a year now, but she was following up for a number of years just thanking me. They had bought a food truck, and their family has a stable income now. I mean, those are the, it's like we really can be excited about what it does, right? It's, at a basic level, life settlement is paying somebody more than the cash surrender value in their policy. If it's a term, it has no cash surrender value, and it's still saleable. And I think that right there is actually a key point to a lot of people, and I get a lot of shock and awe out of agents and other professionals when it's like, oh, term can be sold. But and then there's other examples too. I just kind of look back at some of the key life-changing ones that we've worked on, Bill, and we had another gentleman. He was only 67, but he was able to sell his $200,000 policy for $40,000. He was donating to his church. He was donating to a local nonprofit that he was super engaged in, and it's turning these policies that will be lapsed into transformative assets, and transforming people's view of life insurance from a policy into this is a non-cash asset, which is where most of the wealth in this country is stored, as a non-cash asset. Talk about homes, cars, businesses. Life insurance needs to be up there on the shelf as well.
Let me ask you, Steve, I hate to interrupt, but I want to back up for a second. And agents are obviously doing the right thing for the consumer, for the insured. It has to come first, as we know, but they're also entitled to make a living. So, like, for example, that $110,000 offer to the that went to the insured, the check, what does the agent make on that roughly? Just a ballpark.
On a case like that, they were looking at $15,000. So it's very attractive. When the policy's the right fit, it works for everyone, and it's exciting.
Yeah, it's exciting for everyone. So here, imagine that first case that Stephen explained the example on. Imagine a consumer has a policy, right, that they can't afford anymore, walks away with a check for $110,000. The agent walks away with a commission check for, let's say, just over $15,000, right? When that policy would have lapsed, the consumer would have made nothing, right, unless there was cash value, and the agent would have made zero. Okay, so this is another opportunity, right, to get your foot back in the door, help yourself, and help the insured, number one. Okay, that's how you have to look at this, and that's what it all comes down to. What I'd like you to do, Steve, real fast, for those of the audience members that aren't really comfortable with a life settlement, or maybe they don't understand it, just, if you don't mind, give a 100-foot overview on the concept, and then I'd like to just kind of dive into what they need to look for, right, to uncover these opportunities, because we also don't want them wasting, half their day looking for policies. So if we can just start with the 100-foot overview, and then need to look for that, what would make a good life settlement?
Sure. Yeah, and I think this again, I mean, in my mind, comes back to life settlement. That doesn't necessarily need to be the goal of reaching out to a client. It's our fiduciary duty as agents to review policies with clients, to see, is this still working for you financially? Do you still have the insurable interest that you purchased it for? Have you sold your house? Have your kids gone through college? Is this term policy something you want to convert and pay more for, or should we look at replacing it? I mean, Bill, we've had cases where the agent was able to sell a new term policy, and the one that was expiring, sell the client a new term policy, but then sell through a life settlement the existing term that was about to reach the conversion deadline and become much more expensive. So treating life settlement as a tool in your toolbox of a comprehensive review for your clients is a good way of looking at it. So you're ready to be knowledgeable about, and it should be something that when a client is, and to your what should we look for, over age 65 with some sort of change. I like to say it has to be some sort of change in health since the policy was originally issued. Obviously, if somebody's in very, very bad health, younger insureds can qualify. But typically, there has to be some change in health since the policy was issued, and over age 65, the policy value north of $100,000. That could be a good lead, right? That could be something that we can put into the process. We have a whole team. All we do all day long, all they do is just get the records, get the requirements. We go out to all the end funds. And the funds we deal with, you touched on this earlier, these are the end funds that purchase these policies. So we are avoiding a lot of the middle institutions that will take ownership and then sell to those. So we get direct offers, which often end up being the highest because of our relationships and our process. So kind of touches on what you should be looking for in a good case.
And let me say too, before we move on, think of as an agent when Stephen just mentioned that with the different layers, right, through life settlement companies. So think of like some of the larger, corporate-owned insurance IMOs out there. Okay, I'm not going to mention names, but when there's an executive board and then they report, to the CEO and there's a managing partner, how many layers, how many hands are in the pot? By the time you get your commission, it's been cut up 28 different ways from Sunday. Okay, and it's unfortunate, okay, because let's say the payout at the top, I'm just going to use a rough number, is 200% on a life insurance policy, okay, and by the time you get your commissions, it's 60%, okay. In my opinion, that's like robbery. It's not fair to the agent that's out there doing the work. Yes, of course, there's always going to be one layer, okay, but you still should be getting the bulk of the commission, and the same thing works with a life settlement company. Okay, when there's one layer, okay, and then it's the fund, or sometimes it's even directly with the fund, okay, meaning there's not so many hands in the pot. The offers are higher, commissions are higher, okay. You have to remember that. Some of the big companies with these commercials during, the Super Bowl, okay, that money's coming from somewhere. Always keep that in the back of your mind, and that's why we choose to deal with a company like Steven, like LS Hub. Okay, it makes a huge difference, and you'll notice that with the offers and payouts. All right, anyway, I don't want to get you off track, so let's dive into what these agents need to look for. When is it a good time? Let's talk about that for a second.
Yeah. Good time is a big time is when the term is coming to an end, because there's really a wall. There's a wall there where, okay, they have to do something, which is going to drive a decision. And it's a time when most people just let their policies lapse. There's other major life events, like the house is paid off, maybe the spouse predeceases the insured. A lot of times you see people that have held on to a policy for 23 years for their wife, and unfortunately the wife passes away first. That's somebody who's more than likely going to look at this life insurance policy in a different light now. So these major life events is one way of looking at who could be a qualified lead. Then there's financial distress too. So if somebody's not doing well financially, premiums are pretty much constantly increasing across the board, whether it's a little bit or a lot. And again, annual reviews with your clients, just reviewing their goals, reviewing their situation that's really where you're gonna find the right fit and the right opportunities to bring this up.
So what would you say? Let's dive into existing policies, right, and the consumer's age and health. So what? And I know nowadays it's not like the insured has to be terminally ill, for there to be a decent offer. So what would you say, like, on the average, age 60 and up, 65 and up, and then what term and permanent whole life, UL, IUL, like what? Let's get some pointers out there for the agents.
Yeah, sure. Any type of policy works. I mean, even survivorship, universal life, typically they have very low premiums, which is a good thing. Age 65 and above is really where you start seeing more funds interested, again, completely dependent on health. And you're absolutely right. This is not the person has to have a list of things, terrible health, terminal illness. We have pension plans out of Europe that are offering on 18-year plus life expectancy all day because they have mandates that allow them that. Then there's going to be the more aggressive, they need short life expectancies, but they're going to offer a lot more money. So having a wide variety, and again, just as a side note, funds get deposit, or they raise capital in different ways too. So if you're going to fund A now versus in 3 months, maybe in 3 months they can make a really great offer. Right now they don't have capital available. So again, it's going to a wide network of end funds, which that's really where the technology that we've developed streamlines, makes that quick, makes it efficient. You're not following up with 20 to 30 funds, it's more automated in the back end for the large part. We do have a very, decent-sized staff here that manages that. But that's an important note as well. It's just that it's going to depend on what fund has money at that time, and maybe we have a case and it can take 2 months, and then all of a sudden somebody offers. So a lot of times the cases that make the most sense are going to get quick offers. And this goes down to timeline, which is something important to be able to relay to a client is, first off, we have getting the requirements. Medical records could take anywhere from 3 days to 4 weeks. If they have records at a VA, it could take 2 months. Getting all of that put together can take time. Once that goes to funds, then we're looking at another typically 2 to 3 weeks before we start getting feedback. A complete cycle is not a quick, it's not necessarily quick, but it is the right, it gets the highest offer letting the process take effect, is easily, 1 to 2 months.
Got it. So let's say I'm going to put my agent hat on for a minute. And by the way, I also want everyone to know what's great too is Stephen and LS Hub, and you know this by now, but our company, Levinson and Associates, we do not go out there on a retail level whatsoever. So we're not competing with our agents, which, by the way, I've heard of some IMOs and LS companies doing, which is terrible. It's a interest. So we are 100% wholesalers on both sides. But for a second, I'm going to put my agent hat on, Agent Billy Levinson, right? Stephen, what I want to ask you is, if I'm an agent, right, I'm out here in Cedar Rapids, Iowa, right, working out of my 3rd bedroom, and I have a big book of business. I'm doing this for 23 and a half years, right? And let's just, a bunch of different policies, right, or make up my book, all the above. What I should be looking for first, and just correct me if I'm wrong, would be more of like an age range, right, for my book of business, and then second would be the policy type. Does that make sense?
I would be looking at age range and then the policy amount.
Okay. Term, like you said, term or perm. So age range, and again, what roughly it would be 60 and up, 65 and up generally.
65 and up.
Got it. Okay. So let's say we start with that. Okay, and then number 2 would be face amount, right? Over policy type, like start looking at the face amount first.
Yeah, I'd say it has to be over 100,000.
Okay.
There's a lot of funds that won't even look at anything under 250 or 400. So each different fund has their own rules.
But generally speaking, 100 and up. Okay.
Right.
Got it. Okay. And then third would be policy type, and that obviously we just went over. It could be term insurance, any type of permanent policy, and then the carrier would probably be fourth in line, right? Because we know some carriers there's going to be a little better, higher offer. Others there won't be. Is that correct?
Yeah, and I guess I would go back and second in importance would probably be premium. So premium, more premium to face. So it's obviously $1 million policy with $20,000 a year guaranteed out, not cost of insurance, but out to 95 versus one that's $40,000 that far out. The cheaper premium is going to have a much more attractive offer and more interest in the market. So that's a very important variable in the pricing.
Got it. And we know, most agents, especially Billy from Cedar Rapids, he's not very good. He's not an actuary guy, right? CPA certified, but let's just as an example, Billy's going through his book, and the main point, what he needs to highlight to himself is, okay, I got a guy, right? I got a girl, and they're 65 and older. And really, this is the opposite of life insurance underwriting, where the unhealthier the client, the better, or the insured. The unhealthier, the better. So going back to Billy out of Iowa, right, I'm going through my book, and I'm looking for anyone over the age of 65. The unhealthier, the better, right? That comes first. And then I'm looking at face amount, product type, premium, okay? And you don't have to be a math whiz. And this is another big point, is Stephen and his team do all of that for us and you. Okay, keep that in the back of your head. It's very important, okay? If you're out there selling term insurance and whole life and IUL, and that's your focus, we get that. We don't need you to take the calculator out and start figuring out, premium to death benefit and the lapse ratio, and that's what his team is for. He's the math whiz, by the way, and the tech whiz. So let them do that. You got a guy. We have a simple intake form. Okay, it's on our website. We also have a direct-to-consumer calculator and piece that's on our Insure Me Now Direct site, so you can use either or a combination of both. And then, right, once you have that guy or girl, Stephen and his team are going to take a look, and typically he'll get back to us and the agent, what would you say, within about a week? Just so we know if it's going to work or not, Steve?
Yeah. We'll get you initial feedback. We would do some initial data runs and things that we can get feedback. Yeah, within a week, definitely. We'll get some idea, and of course, then you can relay that to the client. And that's an awesome, excellent point, Bill. It's like you don't need to be an expert in this. You can throw it over the fence. We do everything as part of your team. We're part of Billy's team because we're part of Levinson. So we take care of all of that process because that's all we want to do, and then you can just provide guidance and value to your client. And really, and this is just a little nugget here, is how you approach the client about this opportunity. It doesn't necessarily have to be like, are you interested in selling your policy? Do you want to sell it for cash right now? It's more of a, hey, did you know you have options with your policy, and would you be interested in converting it potentially into cash? And it's not a decision you make now, but we have a process where you can find out what the value of that policy is. Because really the whole first part of this process is just getting them a number. So at the end of the day, we just want to get them a number where they can understand their options. And that's really the sales pitch, I guess, at the beginning. Let's just go through the process, see what it's worth, and at that point make a decision. I always see that resonate very well with policy owners.
Yeah, no, that's great. And we're also seeing this work with a lot of these virtual agencies. They're selling on a retail level, but they never see the consumer or the insured. They never saw them. They never see them. And they're coming up with the numbers, right, through Stephen's calculator, and they're marketing this on the phone or through a Zoom call or a GoToWebinar. So I'm seeing that being done a lot recently, especially since COVID. So that's another great option, is utilize the resources on our website, and then Stephen's team is going to do all the work in the back end. Let me do this for a second, and we, by the way, have some great sales strategies that we're going to give you, so you can start working on these this afternoon. But what I want to talk about, too, for a second, and I think it's important for the agents to know, what happens, and I've seen some monster cases, especially for the agents, okay? Yes, it's client comes first. They get their check, their settlement, their offer, great. And then as far as the agent being compensated, what happens, if you can explain to the audience, when, let's say, there's a term policy that's sold, right, and then there's a conversion involved, and the agent's getting paid twice on the conversion and then from the life settlement. Can you give us an example of that, how that works?
Yeah, for sure. And this is, again, it's a great timing, and it's also it makes the opportunity a lot greater for the agent involved, because you're getting conversion commission and you're getting a fee on the sale of the policy. So this also brings up, and I think I'm probably going through all the
It's okay
here already, but when you're talking to somebody, let's say they have a $5 million term, they may not want to sell that policy, but you have a term, we can do a partial term conversion on that, So let's sell 2.5 million. Is you keeping 2.5 million for yourself good for now? And they say, okay, well, that's interesting. So partial term conversions is it's a good strategy at approaching people that may not want to sell because they still have some, family or a property or some reason why they still need a policy. Okay, where is that now? You had $1 million policy. You only need 250. Let's price 750. Let's price 750,000 as a settlement. And guess what? If we get an offer and they sell that, the agent's getting a conversion on that 750, and they're getting the fee on the sale. So huge opportunities.
And that would work. Sorry, Stephen. That would work on a full conversion or a partial, correct?
Correct. Yeah. And of course, you're now in discussions with the client. For the remaining term they're holding on to, or do they want to keep it as a term? But yeah, that's a great way of, you can segment the policy, let them keep what they think they need, and probably do, and you can still proceed with a settlement conversation.
Wow, that's another great idea. So this way, and just tell me if I'm on the wrong track here, but if there's $1 million term policy, they could still keep, let's say, half of the policy remaining, and then convert half. You, as the agent, are getting a new commission on the conversion, plus you're getting a fee for the life settlement part that was just sold off. So let's say half the policy. That's correct?
Yeah, exactly.
Unbelievable.
That really gets the attention of people, especially with bigger policies, because they're going to reevaluate, get the coverage they need now. They're going to reduce the premium they're paying for that, and they're going to get a lump sum for an asset they didn't understand they had before. Wow. Yeah, let's look into that.
That's unbelievable. And on the average, and by the way, I want everyone to know too, none of this is scripted. We didn't have this laid out ahead of time. Like I said, I've known Stephen for a while, so we're kind of doing this just off the whim. But average commission, let's say it's a nicer policy, right? A few million in death benefit. We're talking about the agent can make here between a conversion commission and a fee for the life settlement. I mean, this could be $20,000, $30,000, $50,000, $60,000 to the agent. Is that right, roughly?
I mean, get a big enough policy, you can be in the six-figure, get a $20 million policy. I mean, that you could be high six figures. It's the sky's the limit as far as if you get the bigger policies. But the more compelling stories I've found, and this goes back to why do we really do this? And I mean, I went through at the beginning, definitely was focused on, I got to make money, but more so now it's the more compelling stories are going to be in the smaller $250,000, $500,000 policies. Those are going to be the people where it's, wow, I got $20,000, I got $50,000 for my policy. I can take my family on a trip. I can afford, retirement expenses for next year now. Those are going to be where it's the more heartwarming. In my experience, the bigger policies are great, and we definitely want to focus on those. But the smaller policies shouldn't be overlooked. That's where you're going to find the people that really need it the most. And again, that's why we do this, and make an impact with an asset that they paid in for so many years, and most people just let it lapse.
Yep. That's key. What you just said is so important, and it's obviously doing the right thing for the client, no matter what the commission is, and then you're entitled, right, for doing the work, for bringing up the opportunity to make a living. So client first, agent second. We always speak like that, do the ethical thing, do the right thing. But I also, and I think this is important, let's shift gears again, and I want you, Stephen, to pretend you're an agent now, right? You have your agent hat on, and I want you to share, if you don't mind, some great sales ideas, some great strategies right? Things that you would be looking for, right, to move the needle in the LS world. What would you be doing?
Yeah. Well, one thing is if I had a book of business that I didn't have complete records of, I would be doing book of business requests and talking to the insurance carriers where I've written term policies in the past and requesting my book of business. A lot of carriers will provide that to you in a digital format. That's going to give you the data. So first thing I'd be looking at is, do I have the data here to work with? If you do, or you subsequently get it, then it's, okay, how do I segment who I should contact first? Depending on how complete your data is, you may have when conversion deadlines are for people. Well, that gives you obviously 3 to 4 months before that you're calling them. So getting your data in order it can be a big lift, but once you get it done, it's a really powerful thing to have at your disposal. Next, I'd just be looking at anybody in that age range doing a policy review. This is going to be, the conversation opener is going to be, hey, let's review your policy, but having this and potentially some other, final expense, other products that Levinson has in your review that you can bring up. It's just another way to have a value-driven conversation with those clients. And again, life settlement shouldn't be the only topic. It could be a main topic, but it doesn't have to be the only topic, because maybe they're not interested in this. They could be interested in an annuity or a final expense. So putting together kind of, here's what I'd like to go over with the senior client, and then engaging in those conversations is important. And of course, conversion deadlines are just a great opportunity as far as the sales strategy are concerned.
Excellent. Now we're going to talk about the one word that everybody wants to know more about: overcoming objections. Right, the big one. So, any tips and tricks you can share with the audience, because I'm sure this is going to come up a lot.
Yeah. It is going to really just need to be on their side. And this is also a good thing about, hey, we have a service that does this. Because if you think about it, you're on the side of your client and you tell them, hey, we have this is all they do. They're going to get you a number, and all we're going to do is review it. And once they get us the number, then we sit down and we discuss it. It makes it into more of a, you're on their side of the table. The company that, us that is going to go out there, and you can, of course, highlight the fact that this is not a single buyer offer. This is global network, end funds, highest offer possible, because at the end of the day, you have an asset you can sell one time. You sell it once, and you need to get the highest offer. It's super important. I'd say staying on their side of the table and utilizing, service can allow you to be in a good position to, like, oh, that is an objection. Let's, ask them about it, and you stay on their side. Once people are engaged in this, as long as they're getting some sort of feedback, they're on board. The major objections are going to be around timing, going to be around privacy. I mean, if they have, this is a big one. They may say, oh, I don't want to give my Social Security number. Then that's okay. So on the application, it does ask for full social, but if you have a client that's objecting to that, we can work with the last 4. So, there's some of those objections could just be privacy concerns, which, again, we just want to get you, if you want to accept it, we need a copy of your Social Security card. We need all the information at that point. But yeah, I think those are good suggestions.
Yeah, and I also want everyone to know that if Stephen and myself, we never, ever get involved with the consumer, the insured. That's your job, and we never cross that line. But let me ask you a question, and I don't know the answer to this, but I'm sure if there's a decent case, right, for everyone, the agent, the insured, for everyone, would you help the agent in closing the sale? Like, let's say maybe if it's through a Zoom with the agent and the insured together, would you help them out if needed? Or is that something that, depending on the situation?
Of course, yeah. And if it's always going to be presented to the agent, the financial professional representing the client. If we need something, right? If we need a special authorization signed or a carrier document signed to get certain things, that's going to be going to the financial professional, the agent. And if they want us, for some reason they say, hey, I'm out of the country, can you call them on my behalf, or can you get this down? Yeah, we can do anything. We can be there as much as you want, as little as you want. But certainly on the presentation side, that would be something more along, like I would be available for. At this point, probably thousands of policy owners across different aspects, so would be very open to helping in that regard.
Okay, no, that's huge.
And again, either as LS Hub or as your life settlement person in your office, you tell me if I don't have to be from any brand, right? So it's very, and that can be like, you may want to represent this as your in-house service, and you have a department for that. Just let me know. Just let us know, and we can be there in whatever capacity as an expert.
Yeah, see, that right there within itself is priceless, because going back to Billy, the agent in Iowa, right, and I don't know much about this part of the industry, right, once I have a case, right, we know it has legs, it's a real case, and it's going to work, right, for Steven to jump in as a coach and help me, priceless. Help me close the deal, that's priceless. And he's not by the way, this isn't like a third party coming in that's going to take, half your commissions and half the offer. No. Okay, he's the fund, basically. He's the broker. So that's a big deal. I didn't even know that coming into this. So that's huge. And leverage him and the resources. So once you're active with Levinson, we can make the introduction. We're here for you. So if you have a case, you have a guy, you have a girl, maybe you're not 100% sure, run it by us. I'll get it through to Steven's team, and we'll get some answers for you. Okay, that just keep that in the back of your mind. I would also jot that down. I want to also shift gears once again. We got a couple other things to talk about, and then we're going to wrap this up in about 5 to 7 minutes here. So we're almost done, but I want to bring up some key points. And, you talk about, and I know you had some stories, some case studies, Stephen. I have a personal story that happened, pretty recently. And we don't, and I said this a million times, consumers, insureds, anyone, right? We are the wholesaler, the distributor. And I'm in the car with a friend of mine, right? We're with one of his good friends who's an older gentleman, okay, a veteran, and he's in his early 70s, and we'll call him Michael. Michael says to me, Bill, Robert knows that you're in the insurance business, and we're doing small talk, and I met Robert for the first time. Michael introduced me. We're all in the car, and Robert says to me, oh, I didn't know, you were in the business, and I wish I would have known. And I said, why? What's going on? And he says to me, oh, I had an AIG term policy that I was paying on it for whatever, 11 years, 12 years, and I just let it lapse. And I'm like, Robert, why did you let it lapse? And he said, oh, I was paying a fortune on it, and I just thought I didn't need it anymore. I have enough money saved for my kids, and blah, blah, blah. And keep in mind, Robert's in his early 70s and was diagnosed with cancer at that time. Okay. And right away I'm thinking, oh, my gosh, this would have been great for you to get a check back instead of just letting the policy lapse. So I asked him, how long ago did you lapse? And he's like, oh, a couple months ago. So I'm thinking, if we're in that 30-day period, maybe we can turn this around. But it turns out we were 3 months plus overdue, and we couldn't reactivate the term policy. So my point is, look at all those years and paying thousands and thousands of dollars and then just letting the policy go away, okay? And he got zero for it. In fact, he's in the hole because of all the premium that was paid in. So here, if would have brought this up to me and I would have met him a few months earlier, I could have said, Robert, we could get you whatever, 50 grand, 100 grand, whatever it is for the policy. And he would have been more than happy to take anything for it, okay, instead of letting it lapse. So a perfect example where you have to do the right thing, the ethical thing for your clients, okay? And that's a personal, real story. I did use different names, though. Let's talk about two other things, and then we'll put a bow on this. Stephen, another great point. We talk about, and this just came to mind, some of the agents that have been doing this for years and years, the veteran-type agents, even the newer agents. Think about this for a second. We have orphan leads that we give away free to our agents, okay? And the initial agents that wrote the case are not active anymore. Maybe they passed away. Maybe they're in a different industry. They're not licensed anymore. We have thousands of these orphans, okay? And yes, you have to qualify at $10,000 a premium to get these free, okay? Or we have different contests. But this is another great way to get involved in your part of the business, Stephen. Am I right or wrong?
Yeah. Those are going to be aged contracts. That's a perfect source, yeah.
So that's another thing I was just thinking about. What I want to do is I want to wrap up with this, and I think it's also very important for you, the agent, to understand. Actually, if you're the consumer, the insured, it doesn't matter. But tell us a little bit, real fast, about the state of the industry. And then I know years ago when I first got into the business, right, at 23 years old, 22, life settlements kind of had a bad name. There were rumors, right, going around. Can you just shed some light on, how the industry is totally different now, and just give us a little update on where we are today, compared to, back then. And I just want to make sure the agents feel comfortable too, with talking about this concept.
Yeah, and historically, going back to the beginning, there's really been two dark clouds over the life settlement industry. First was with the AIDS epidemic and just taking policies from, people that were dying months later. The second is Stoli, so there was a lot of Stoli going on, and, people taking out policies on other people to then own them via, in this fashion. Since then, this is a highly regulated asset and opportunity. So every state at this point, I think except for two, have model regulation acts for life settlement, regulated contracts, regulated processes, very much for the protection of course, the customer, the policy owner, but also for the fund, predominantly for the policy owners. And it's less of a trying to get terminal policies and there's been a lot of evolution as far as funds and the sophisticated funds in Europe and the U.S. that now have highly refined underwriting strategies that are able to buy different types of risk in a more thoughtful manner, I'd say, and put them into larger portfolios that let them spread the risk. But I'd say there's been a lot of evolution as far as funds available and who's making offers, which stabilizes, okay, more policies qualify, which is great, but also it's from a more standardized and compliant, regulated type of fund. And then there's been a lot of state and federal things that have taken away a lot of the early issues that the industry faced as well. So I wouldn't let it deter you. I wouldn't let it be something that stands in the way of having, because at the end of it is a powerful value more than anything.
Yeah, no, I think that's important, and they need to feel comfortable, right, bringing this up to their clients. Their name's on the line, doing the right thing, reputation, and we've been speaking about this since the beginning. Also, from a carrier standpoint, I think it's also important because, maybe there are some carriers, in fact, they've added maybe something on their application about this, and I will say this. Number one, obviously, Stephen and LS Hub, they're a independent company, a third third-party company. Yes, we partner together on these cases, but it's important to know, and Stephen, if you can also shed some light on this, you as the agent are licensed, right? And you must do the right thing. If there is a good opportunity for the client to get afforded anymore and it's going to lapse, there's nothing wrong with bringing up this solution if they're on board, obviously. Correct me if I'm wrong, Steve. Am I right with this?
You're right. I know there's going to be certain, Wealth Planner Series 6 type organizations where it's like just this option. So you have to be cognizant of that if you're in a group like that. But from an independent, I'd say really thoughtfully looking through this, the fiduciary duty is absolutely considering this option with the client before a policy lapses.
Yep, absolutely, 100%. Now, obviously, if it's not a good fit for the insured and you're trying to push them to do this because you're commission motivated and driven, that's not the right thing to do. Okay, I think we all know that. Yeah. So just make sure it's a good fit for the particular insured. And moving forward, we'll help you with everything else. It is a good fit, and then we'll get Stephen and his company involved. Okay, with that said, I hope you learned a lot. I know I did. I thought this was excellent. It's a different side of our industry that we need, again, to know enough to be dangerous on, right? Because we have to help our clients, our insureds, which is our customer, first and foremost as an agent. Stephen, is there anything else that you want to share with the audience? Anything before we put a bow on this?
I guess just if you haven't been having this conversation already, the best time to start was yesterday, but the second best time is today. Don't let it sleep on you. Just get it into your repertoire of things you're talking about, and it'll pay dividends for your clients and for yourself a lot as time goes on.
Okay, good stuff. Well, Stephen, I appreciate you and I appreciate your time. And I will say there's a reason why that I've stuck with one person, one company during this 8-year period. Okay, because we've had great luck. We never had anything fall into the gray area or something didn't feel right. Everything has been above board, and that's enough for me to say to our agents, hey, if you got a case, we have a good resource for you. Okay, we'll end with that. We have a bunch of marketing material on our website, or like I said, call into any one of our marketers and we'll get you whatever needed so you can start spreading the word and getting the message out there. We also have a bunch of white paper articles we can share with you on our website. We're going to send out this podcast through our email blast system with Constant Contact. We'll include some other good articles there you can read up on a little further, and we'll include some co-branded marketing material that we can set up for you. I just want to say, here we are at the end of August going into September, right? The end of summer. Have a great holiday weekend. Hopefully you're ending your year strong. Use us, Stephen and his team. We're all here to help you. And let's make it a great end of 24, and we'll come out of 2025, hopefully the best year ever. Thank you again. Thank you for listening, everyone. Any questions, once again, we're here for you. Have a great day and great selling.
Thank you for joining us for the Bill Levinson Experience. Please feel free to share this podcast with anyone you think would be interested. You may also visit levinsonandassociates.com and all of Bill Levinson's social media pages for more information.